Good evening, traders. Today is Tuesday, March 21st. We had a gap and go today, and that makes it interesting for tomorrow's FOMC. Not quite sure what to make of it, because you'll see later in my tweets, I start asking the question, when are we going to fill that gap? Tomorrow? Next week? Next month? Next year? When are we going to fill it? It could be tomorrow. You never know. So, there you have it. This is the 65-minute chart. Here's the gap. Now, you're actually going to see some other tweets that I had throughout the day where I start picking up on these little oddities. In fact, you're going to see a tweet 30 minutes into the trading. I actually called it. I called the gap. I said, this is a gap and go. Unfortunately, I didn't stick to my guns. So I lost out on that. I actually made a call 30 minutes into the trading. I said, this is a gap and go. But I didn't stick to it. I should have, obviously, in hindsight is 2020, but I didn't do it. So let's get into the tweets. Right there, 8:42 a.m. We have a gap. We have a gap up. No EMA backtest yet. Oh, that would have been like right here. That's what I'm referring to right there. But I'm still open. Look at that. I'm already tweeting. I am still open to the least likely possibility this is a gap and go or a gap and fill in the afternoon. Okay, so I'm open to the idea. I'm already open-minded about it. I wasn't thinking necessarily it had to go down there and fill that gap first thing in the morning. Okay, MACD's curling up. Sneaky, sneaky. That would have been right here. You can't see the MACD in the tweet, but you can right there, see? Curling up right there. Okay. Okay. In 1 minute, this 5-minute candle closes. That would have been like this one here. This one right there. Here it is. If it closes green, there is no bearish divergence on the MACD. It's a gap and go. There it is. Okay, so I called it right then. It's a gap and go. Now, so I ended up getting calls right there. So as you see, obviously, I got trapped right there, you know, coming down. So I got trapped. And here, but here's where it came down, right here to the main channel. And I was still waiting. I'm like, I'm gonna watch this. So I got out of my calls right there. I was like, I'll take the hit. Okay, so sold my calls. Oh, where's the cursor? Right there. Right there. So you suck, market maker. You found support at 396.30, which is this red dashed line right here, which is the same thing right here. Found support, came up, came back down underneath of it. See, so sneaky. So that's what I said. I said, you found support after all. You got me on this one. Meaning you trapped my calls that I got up here. So, but I said, I'm going to wait to sell my puts though. MACD still far below the zero line to overtake the EMA 50. That would have been at this point right here when I said that, right there. Too far below the zero line to overtake EMA 50. But nonetheless, look what market maker tries to do. It's still going to try to pump it up, only to fail EMA 50 again. Okay, so that's that tweet. Okay. Yep, at the time that tweet would have been right here. It is anticipated that 396.30 will now be resistance. So, so now we know what market maker does. Rips it up only to fail the EMA 50 and come down below the channel line again. So, yeah, it's just little pump and dump schemes throughout the morning here. Okay, see, now I'm starting to comment on this. There's some surprising resilience here. Very resilient. Okay, I'm already picking up on these little clues, right? Earlier you saw the tweet. I said, "You guys, this is a gap and go." And now you're starting to see me make these observations. Ah, wow, very resilient. I don't expect this. Okay? All right. Uh that would have been this tweet right here at this point in time, right there. And okay, so the MACD is close to the zero line when I made that tweet right here. It never crossed the zero line. It came right up to it and then turned back down to make a lower low on the MACD. See that? So, but at that time, I said it can actually reverse and go up. Here I am again. I'm like, wow, I'm astonished, right? I thought, well, it's going to go up because it was right there. It was right here at the zero line. I was like, well, it could, but it didn't. Okay. So here we go. Here's the tweet where I said, yeah, the MACD approached the zero line but never crossed it. And therefore, EMA 50, which is equal to the MACD at the zero line, cannot be reclaimed. That's why this failed EMA 50 right here, because the MACD never crossed the zero line. That's why. But at the time I was sending this tweet right here, it was trying to create a higher low notch right there. Well, now we know it went into a lower low notch, sending the price here even lower. Okay. So, made higher highs today compared to the 316 last week. I don't have that. Well, 316. This is last week, right here. Here's 316. So we already made higher highs compared to 316, and likely gap fill, then go back up. So when was this? Okay. Well, obviously, I still thought it was going to fill the gap down there below at this time by late morning. And okay, there are tons of options for the market maker to go below the gap and still make a higher low. So here's the gap right here. You can still go well below that gap. You can come all the way down, like down here, and that's still a higher low because the breakout point, the true original breakout point, is like all the way down here. So you have a lot of latitude to take this thing down and still make a higher low. Okay, that's the point I'm trying to make here. The higher you go, the more latitude you have to fall. That's the idea. Okay, it's crazy. Okay, so right here, I started I scaled more puts because I'm like, oh, I bet that's resistance. I bet this is resistance right here because you could start to see these wick down, right? I was like, oh, I bet that's resistance. I'm gonna get some more puts right here. Okay, well now we know what really happened. Okay, so aha, aha, ha, ha, ha. All right, check this out. This point is higher than this previous point. This tweet right here, basically at 12:20 Central Time in the afternoon, this would prove to be the most consequential of the day. Why? Because you just made a higher high. That's why. Okay? So already had me saying 30 minutes at opening bell. But mind you, I didn't stick to my guns. But I said it. I tweeted it. I said, you guys, this is a gap and go. Then you heard me say, yo, this looks pretty resilient, right? You saw that tweet. Like, man, this is kind of wow. So I'm already making these observations like this is not quite so weak. And then I make this observation, which is significant, that this point is higher than this point. That is a significant observation in hindsight. Okay? Because what happened? It kept making higher highs now than this point. See? It started off, this was higher than this. That's when I made the first observation. Then this is higher than that. See, you basically, I'm just looking left. I'm like, man, what the? Okay. So when you put all the pieces together, there's basically there's hidden strength here. Okay. So that's when I said, you know what, man, I'm scaling out of these puts. Okay. Glad I actually did. I don't know how many of you guys held on to it, but oops, because now we all know what happened. If you'd have held on to it for the rest of the day, you would have been in big trouble. Okay, so here I said again. I said, you guys, this move is strong. There's no bearish divergence, and it hasn't even really taken off yet, right? But I'm already saying, look, it's strong, it's resilient, right? I said this is a gap and go, but like I said, I was like, I didn't stick to my guns. I should have. In hindsight, obviously, I should have treated today more like a swing trade, not a day trade. Because if I'd have swing traded it, oh, that'd have been great. Okay, so okay, yep, I'll be damned. So after it makes the higher high, it comes back down right here. Okay, but it doesn't make a lower low because this is still higher than that. But it still just comes back down. So it's just chop. So by far and away, this is the trickiest day that I can recall in the last 3 months. I don't remember it being this tricky. Okay. So, okay. When the move was right here, when I sent that tweet, right here, look what I say. Guys, I can see this possibly making new highs from this morning. The 65-minute chart is very strong. It's astounding. See? So, like basically throughout the day, I'm already making these comments, like to my own astonishment, right? I can't even believe what I'm seeing, but I'm making these comments, okay? And it just kind of goes to previous trading days when I just rely on my gut. What's your gut telling you? See what I mean? It's like, in this case, I didn't. I guess I didn't. I didn't go with my gut this time. Other times I would. Other trading times I have. I'm like, you guys, this seems like there's something going on here. But this time I didn't go with my gut. I think it's because that gap. I kept thinking about that gap. I'm like, man, you gonna feel that gap? But turns out, nope. It's a gap and go. It was not a gap and crap. Okay. There he is. Still no bearish divergence. Stunning. That would have been like right here. It just kept going up. It just kept going up. Up and up. No bearish divergence. Okay. Right here. Right here. This was the moment the squeeze happened. Right here. That's the tweet right there. Okay. At that moment, the MACD was starting to turn down. That's why I'm like, yeah, I don't. That's why I got puts in this area. I'm like, look at the distance. Look at the distance between, let's look only at the MACD. The distance between the MACD and the zero line is still very, very great. The distance is great. That's why when you zoom in and you look at this, here's the EMA 50 line. Here was the price at the time. I'm like, you're not going to take it. You're not going to take it because the MACD is too far below the zero line. However, oh, you can take it if you get a short squeeze. And that's exactly what happened. They squeezed it. I bet, had they not squeezed it right here, this would have been the moment it would have gone down. Because look at the pattern. Lower highs, down. See what I mean? That was the move. But it was at this moment the squeeze operation began and it went up. Okay? Because as you see, the MACD was starting to curl down and you were below the zero line, right? You're below the zero line and it's starting to curl down like, oh, you're losing steam. But then all of a sudden you rip up like this? Come on now. That's a squeeze. That's a short squeeze. Right? I mean, that's just the way it is. So they threw a short squeeze in there at midway point. Well, actually, that's not midway point. Oh no, I sent this tweet at 3 o'clock. Oh, this would have been 1 o'clock. This would have been approximately 2 p.m. Central Time. Oh, sorry, Eastern Time. Eastern Time, right there. That's when they got the squeeze in. So that's it. I mean, that. Okay, so I sent this tweet with 30 minutes to go before closing bell. I said I was disappointed that the gap was not filled. When will it? Tonight, tomorrow, next week, next month, next year? When will it? Because we have some other gaps that have not been filled for months. Right? Months. When is it going to fill that gap? That's an open question. That is obviously subject to debate. I want to know if that gap will be filled as early as tomorrow. It could be, guys. It could be. Why couldn't it? We've had a 45-degree angle straight rally for the last 2 days, including overnight too. Why couldn't it go down and fill that gap tomorrow for whatever reason that market makers deemed what could come out of FOMC, right? You don't know. Okay, so, yeah, okay, here we go. Look at this crazy move the last 2 days. Look at this. That's a 45-degree angle up, guys. 45-degree angle up. So it's an open question. Could FOMC be adverse that it creates a higher low? Meaning, tomorrow we're still messing around up in here somewhere, potentially. But could FOMC say, no, you're going to take it back down here. And you're going to fill that gap. Like, right here. Here's the gap right here. Oh, no, you're going to take it back down here and fill that gap. Could it spike down there and fill the gap? Oh, sure. That's what happened on October 13th. The low, by the way. The low. October 13th. SPY 348.11. It went all the way down there and then wicked up. Okay? Could it do it tomorrow? Well, you never say never. Never say never. Close gap tomorrow. Rallying into FOMC is not good. That's as a general rule. That's a general rule. Why? This is. Did I say this? Let me see. Let me see if I. Okay, let me see. Let me see if I say that. Here we go. Yes. Here we go. Here, right here. Remember, guys. Market maker always takes it higher first, knowing the following day will go lower. They do this all the time, guys. All the time. Before, like, let's just say non-farm payrolls on a Friday is going to come out, they rip it up on Thursday night because they know they're going to take it down on Friday. They do that all the time. So that is very much a possibility. I don't know how much of it is a probability, but it is very much a possibility, especially because we have been rallying at a 45-degree straight angle up the last 2 days. Okay? But the lower results in a higher low because you're falling from a higher point. We have seen this over and over again. We have seen it a gajillion times. Anytime I see futures up, I'm always a little bit suspecting something's gonna happen here the next morning, and it always does, guys. Like those times when you see those short squeezes, like what was it last week? Yeah, last Thursday. Last Thursday. When I was talking about, I was like, oh, you didn't even backtest that EMA 50. Oh, you're gonna pay the piper, and you did on Friday, didn't you? See, that's what I mean. So we just got to be open-minded about tomorrow. Yeah, MM could have left that gap today because it's possible it's going to fill it tomorrow. Possible. How probable? That's debatable. And that's basically where we're at, guys. So, FOMC tomorrow. We're going to find out. We're going to find out what market maker is really up to. And we're going to find out the direction. I do find it unlikely that they spike it up yet again. Despite that 45-degree angle rally we've been having the last 2 days, again, then you're going to go up even more? I don't remember the last time I saw that in all of 2022 or 2023. So, there's that. So, just got to be open-minded about tomorrow. And basically, you got to be prepared for the. I would be more prepared for the 2:30 p.m. Jerome Powell speech. Not so much the 2 p.m. 2 p.m. is going to elicit a response for sure. But when Jay Powell takes the mic, that's when the wild action really starts. So just get ready. Because remember what happened last time on December 14th, FOMC. We were kind of rallying, actually. Going right into it. And what happened? Down. Okay? So that's a reminder. And I will remind you that on March 6th, no, sorry, 7th, March 7th, 2 days before the SVB fiasco, March 7th, Jerome Powell took the mic. And what happened? It tanked. That was the beginning of that down move that bottomed at 383. Okay? So, be careful. Be vigilant. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00 Woe, signing off.